We are live. Yay. All right, so we're live. Well, black then, laddies. Let's go. All right, let's get rid of this. And here we are. Good evening, everyone. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks, show you exactly what I'm doing to get a simple, safe, predictable, consistent 1% per week. Now, if your math is right on par, it should be 50% per year or more. 1% per week comes to over 50% per year. Now, let me tell you what we're not going to do here. Yay, dividends, Paul. Thank you for that. What we're not going to do here is I'm not looking for companies to shoot to the moon. Now, you all know what that means. If I buy it today, tomorrow it's worth 500-600 times more than I paid for it. No, it's not what I'm looking for. I want to say it slowly so you all understand. I am not looking for capital appreciation. What that means is I'm not looking to buy a stock and have it go up. It's not what I'm looking for. I'm looking for consistency of weekly cash flow. I don't care how much money you have. You can have millions upon millions of dollars. If you do not have cash flow, all that money is basically worthless. A lot of people, they have what's called land rich or house rich and cash poor. Sorry, you can have millions of dollars in your bank. You can have millions of dollars in equity. You get millions of dollars here and there. But if you have no cash to spend, no currency coming in, what the hell good is all that? So I'm looking for cash flow. So I have a very strict rule when I'm looking at stocks. Number one, I'm looking for companies that are consistently profitable. 2 decades of consistent profitability. Now, stock market's been around for 400 years, in case you didn't know. 1602 was the very first dividend stock sold. Okay, the promise was you invest in our company and we will share the profits with you. 1602, actually the 1590s, that's where they came up with the idea. It wasn't until 1602 they sold the first stock. They went door to door. Hello, have I got a deal for you? Invest in our company, we will share our profits. Well, this company was so big, so huge, they averaged 18% return per year for 198 years. 198 years, the Dutch East India Shipping Company reigned supreme. They had their own money. They had their own army. They had their own countries. They were freaking huge. Okay? Promise. We're going to share our profits with you. That's where dividend stocks came from. The modern stock market initiated in 1602. I believe it's the Amsterdam stock market, very first one. It opened its doors in 1607. Okay, fine. So what are we doing here? Well, I don't know about you guys. But what I'm doing here is I'm investing in good quality American companies because they're terribly. I appreciate you guys from overseas joining us. There are a few of you here. I appreciate that. Thank you very much. But European foreign markets just don't work the same as the U.S. market. Terribly sorry. All right, it is what it is. Up, down, left, right. Common sense. Terribly sorry, it's not working in your favor. However, I only invest in companies that are consistently profitable and have weekly options. Because I get 2 opportunities to make weekly cash flow. 3. Okay. One, trade something that trades on a weekly basis. 2, sit in front of my computer and do this all day long. Or 3, get a job. Now, I've been working since 1973. I have no desire or whatsoever to rejoin the workforce. Okay, 73 to when I retired 2 years ago. That's still over 50 years. 50 years of working. Terribly sorry if you don't like it. I bow out. Next generation, come on in and take my place. Grab the broom, sweep the floor, grab the shovel, dig the hole. Whatever, however you want to look at it. At some point, you got 3 opportunities. Okay, 1, you're going to age out, which means you're too damn old to go to work, and your boss says, hold on a minute. Hold on a minute. Before we go much further. You're too damn old to work. Keep your ass home.
Your
age out means you're too old to work. That's number one. Number two,
you can
toe tag out. You know what that means? That means you die on your way to work, die on your way home from work, or you die at work.
That's
toe tagging out. That's two.
Number three.
Are you dig the job and shove it? Ain't working here no more. You earn enough money from your assets or your investments where you do not need to punch a time card anymore. And I feel so privileged and I feel honored that a few people, a bunch of people actually called me and said, James, thanks to you, I don't have to go to work anymore. I got an email the other day that said, hey, James, I owe you a lot. I'm actually on the golf course. So, depending, see, here's the funny thing. It's kind of funny, it's kind of sad at the same time. Most people have no clue how much money they need to be comfortable. It's drilled into our head. Get a job, work the rest of your life. For the rest of your life. Until you die. Usually that's the way it works. However, if you knew how much money you need simply, safely, predictably, and I love the Lee family. Simply, safely, predictably, consistently. I love the Lee family. If you knew how much money you need, there's a big difference between needing and wanting. If you knew how much money you needed, you now have a goal, you have a target, you have something to aim for. We'll find out what your assets are, how much money you have available, how much equity in the home, how much if I get rid of this, how much if I get rid of that, how much if I put a little bit of overtime in. I love the idea of no tax on overtime. That should be great for some of you guys. Okay? However, Leonard, good evening. Professional freak. Are you looked in the geeking? I have no idea what that means. Leonard, thank you. Bro, thank you. All right, interesting, whatever. So, as soon as you find out how much do you need on a weekly basis, you can work the equation backwards. Because the strategy I'm going to show you tonight is a simple strategy created for my 9-year-old daughter. Imagine that. 9-year-old daughter says to me, Thank you, sir, looking into this method at a very short distance. Thank you. Back in 2008, my 9-year-old daughter says to me, Daddy, what are you doing? I'm trading stocks. See, she said, can you teach me? Can you teach me? 9-year-old, serious question. Would you rather, I ain't falling for that again. Come on, grow up. What the hell's the matter with you? 9-year-old girl asked, Daddy, what are you doing? Can you teach me? Most adults don't understand this. So how am I supposed to teach a 9-year-old how to do this? So my challenge was, it had to be simple. It had to be safe. Predictable, consistent, and no way for her to lose. That's 5 criteria. You like that last one? No way for her to lose. Because we all know if she loses her money, I'm going to feel like crap. Because she's going to say, Daddy, I lost my money. And I'll feel like crap. And then Mama gets involved. I'm sleeping on the couch. The couch is very comfortable, by the way. So for you guys who know, the couch is very comfortable. Anyway. Besides the point. Simple, safe, predictable, consistent, and no way for her to lose. Now, that's the criteria for a trading strategy for a 9-year-old. Well, here's the crazy part about it. It took me a couple of weeks to figure it out. Because I've been trading for a long time. Don't get me wrong, my first 5 or 6 years, I did okay. But it was never consistent. It wasn't predictable. Big win here, a little loss there, big loss here, big win there. Up, down. No consistency in my first 5 years. It wasn't until my 9-year-old said, Daddy, can you teach me? Okay, great. Simple, safe. So here we go. 5 rules. You ready for the 5 rules? They're very simple. Rule number 1, never buy anything unless you understand, want to hold on to it for the rest of your days. 2, never sell at a loss. 3, make sure the company's consistently profitable. 4, weekly options only. And then 5, make sure the numbers work. Now, if you put those all together, you think to yourself, that's some pretty stupid advice. Because it all sounds like common sense. Well, it is common sense, but the funny thing is, common sense really need to change the name. Because it's not very common. Most people have no freaking clue. And you think to yourself, well, I think to myself, I said, wait a second.
Isn't this
something you're supposed to learn in elementary school?
Isn't this
something your parents are supposed to teach you?
Isn't this
something that you should have learned in school?
If it makes sense,
why not?
I have no
words.
If
it makes sense, why not?
Okay,
1% a week. Think about it. 1% a week. That's 50% per year or more.
So let's get
started. Let's go on. Let me tell you what we're gonna do. You're gonna tell me what stocks you like. I'm gonna go through my little spiel. I promise you, I'm not gonna try to sell you anything. I'm not gonna give you, hey, if you buy this, you're gonna get that. Have I got a deal for you? If you order now, you get 2 for the price of none. No, I'm not gonna do that. Okay, we're all adults here. We know how it works. In the bio, wherever you are, because there's 9 channels here. Wherever you are, in the bio gives you all the information about me. How long I've been doing this, what's my website, what do I have for sale, all kind of nice and fun stuff. But here is just pure education. Here is something that I want to pass on to my children and my grandchildren. Because I'm not going to be here in 20, 30 years. Uh-oh, I got some noise in the background over here. Gates, is that you making that noise? Alrighty. Alright. So. That was Amy. That's okay. Passing the buck. Blaming the poor girl. All right. So anyway, simple, safe, predictable, consistent. Now, I did all the rules, right? So we're actually going to go take a look at a few shares, a few stocks. Tell me what you're looking for. I'll give you my honest opinion. Now, don't get all pissy if I don't like what you're asking. Because I don't like everything. Every single week we check to see how many stocks are available to invest in. This week, where are we at? August 13th, 2025. August 13th, 2025, there are 10,321 different companies we can invest in the stock market. That's not including cryptocurrency. That's not including Forex. That's not including futures. That's not including a lot of stuff that we can invest in. So what I'm doing is a very, 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 very small window of opportunity. Because there's so many other ways you can invest your money. You know what? I've tried a lot. I'm not going to say I tried them all because I haven't. I've tried a lot. Okay, I've tried real estate. I tried collectibles. I tried fine art. I tried a lot of stuff. Stack Team app. You have been added to what the hell? Why the hell am I added to? I get notices that pop up on my phone every once in a while. It tells me something. I forget what I got. I have ADD. I don't know if any of you guys know what that is. That means squirrel. I lose focus every once in a while, and I need something to bring me back snap to it. Right. Anyway, so what we're going to be looking at is good quality companies, specifically those that are in the right time, right place for us to take advantage of. It's really not that difficult, and it surprises the hell out of me every time because I have the parameters set on all these channels so nobody under the age of 18 can show up. Now sometimes they squeak by because there's always a ways around things, but for the most part, most of you are over the age of 18. Okay, so which means hypothetically, I say hypothetically because I've talked to some of this younger generation. I'm thinking to myself, oh my God, what are we into? What are we in for in the next couple of years? Anyway, if a 9-year-old could grasp this concept in 15 minutes, 15 minutes is all it took to explain to my 9-year-old daughter how to do it. Because it's actually that simple. Number one, if it's not on the list, no. Number two, if it's on the list this week, this is all we're going to look at. Number three, where's the high, where's the low? Where is the stock going? Where is the stock going? Number four, what are the numbers looking like? If I buy it for this, or I'm selling that, how much am I making? What am I walking away with? It's not that difficult. It takes 3 to 4 seconds to look at a chart. High, low, where is it? Look at the direction. That's it. 3 to 4 seconds. Next, if it doesn't fit, guess what? There's 10,321 different companies. If I don't find one today, I'm pretty sure I can find one tomorrow. All right. Let's get started. Who wants to go first? TSLL is already up, so let's do TSLL. You guys know that one. Let's go all the way back to look at the whole year. Okay, now when I say it should take 3 to 4 seconds, and like my new Vibe board is cool. Anyway,
3 to
4 seconds. What am I looking for? You ready? 5 things. 5. You ready? Count with me. High, 1, low, 2. Where was it? 3. Where is it? 4. What's the direction? Sideways, up, down, sideways.
That's it.
That was less than 4 seconds. That's all it should take. That's initially, just to take a quick look. So what am I not looking for? Well, I'm not looking to be the high of the year. No, thank you. If it's at the bottom of the year, I want to wait and see if that thing bounces and goes back up again. Because stocks do 2 things and only 2 things. Okay, they go up and they go down. That's it, and that is all. Up, down, up, down, up, down. They don't do anything else. Nothing. Up, down. That's it. Flip a coin. Up. Flip a coin. Down. Flip a coin. Up. Flip a coin. Down. Flip a coin. However you want to say it, whatever you want to do.
Sean,
I'm going to mute you. All right. Get a little bit of feedback in the background there, Sean. If you like a question, just unmute yourself and just say, "Yo, I got a question." Okay, so if the stocks go 2 directions and only 2 directions, great. It tells me where it's going. Now this is the 1-year chart, so that's just a quick view. Next, after I look at the 1-year chart, I want to take a look at the numbers. Remember Rule 5? Make sure the numbers work. Well, let me explain to you what the numbers are. First and foremost, I look for the big man. The big man on the board. You ready? Here we go. 1286, 1286, 1286, 1286.
What do you think?
You think 1286 is the big number on the board? Yeah, it's the last traded number for today. Now, it may be trading at the moment, right here, after hours. But I can't use after hours because my account is approved for market hours, which is 9:30 a.m. to 4 p.m. All right, so these numbers here and these numbers here are all going to change tomorrow morning at 9:30 a.m. And they will change every 2 to 3 seconds until that bell rings at 4 p.m. All right. So let's see what we're doing. All right. We already did this. Now over here, 1286. Now I do what is called a covered call on pre-qualified dividend stocks. Now, what I consider as a pre-qualified dividend stock is any company that is consistently profitable for at least 2 decades. That's 20 years. Now, if you're bitching and moaning saying you can't find companies that have been profitable for 20 years, yeah, you can. Stock market's been around for 400 years. Consolidated Edison is a U.S. company that's been trading and paying dividends for over 200 years. Okay? Coca-Cola, Pepsi, Wells Fargo, Bank of America, Capital One Finance.